And good morning, everyone. It's nice to be here today. I'm here to talk about Northgold. We are a gold exploration and development company advancing multiple resource stage assets in central Finland. We're still a relatively new story after listing earlier last year, in an IPO that was ranked the third top IPO of the year out of 41 companies listing last year. And we finished the year 41% above our listing price last year before falling off this year along with much of the junior gold mining sector, which collectively is trading around 4-year lows, which we think creates a good buying opportunity for junior gold mining stocks right now, particularly given where the gold price is at and is headed. And we think that's especially true for Northgold. I'll make some forward-looking statements, so please check out this disclaimer on our website. The presentation will be on the website today after the presentation. So we are Central Finland's premier gold explorer in that we're the only listed company focused on this region. Finland's the top gold mining country in Europe, but much of the activity, and that's after Finland only opened its doors to investment by foreign companies in 1996. And that didn't really take off until 2010 or so. And like I said, much of that investment is in the northern part of Finland, and the central part of Finland is rather underexplored and underinvested. So we are a Swedish listed on the Nasdaq First North growth market, and we're advancing our projects in Middle Ostrobothnia Gold Belt of central Finland. We have our flagship Kopsa project, and then our secondary Kamala Trend and Hirsi-Kangas projects. And they're all sort of co-located within the Middle Ostrobothnia Gold Belt, all about 50 kilometers apart from each other. So currently we view them as separate projects, but in the long term, we envision these projects sort of merging and becoming part of a broader gold camp in Middle Ostrobothnia with perhaps a central processing facility that's fed by multiple satellite deposits. And here's what we see as our 5 main investment highlights. We are in the attractive jurisdiction of Finland, which is consistently ranked a top mining jurisdiction globally. And we have a dominant land position with district scale potential and an underexplored and emerging belt of Finland. We have solid starter resources, and we have good potential for resource growth as well as brand new discoveries. 3, we have good local infrastructure, including road access to all of our project areas that connect to rail and port. And our mineralization that's been drilled is considered high value in that it's near surface, it's got low discovery costs, low strip ratio, it's suitable for open pit mining, and it's largely open at depth. So there's been very little drilling at depth. Of course, it gets more costly to drill at depth. So historically, all the drilling has been shallow, and we see good opportunity to go deeper to grow this gold mineralization. And lastly, we have a strong, experienced, and incentivized board and management that together own 8%. And the company is backed by supportive founding shareholders with multiple successful listings and JVs with majors. This slide highlights our assets. As I mentioned, Kopsa is our flagship. It's primary gold with a little bit of copper, with compliant resources of around 550,000 ounce gold equivalent, and that includes a large 44 square kilometer land package. And then our secondary projects, Kamala Trend and Hirsi-Kangas, which host 147,000 ounces and 89,000 ounces, respectively, and those also have large land packages that are poised for new discoveries. As shown, our total company resources amount to roughly 807,000 ounces gold equivalent, and that most of that is 43101 compliant, which is Canada's standard for mineral resources, and or JORC compliant, which is Australian's standard for mineral resources. And we aim to reach a 1 million ounce exploration target following the resource update next year. And we have a mining permit that's pending for granting this year. And we intend to do an PEA, Preliminary Economic Assessment, for our flagship gold project next year. And as shown, our projects are tightly located there in the Middle Ostrobothnia gold belt of central Finland. So part of the thesis for Northgold is that there has been lots of gold investment in the Swedish side of the Gulf of Bothnia that's resulted in numerous discoveries along this gold line and VMS trend. It has a deep history of mining in Sweden, and we think that prospectivity should extend over to the Finnish side of the belt, which has had a fraction of the investment and exploration, but has already yielded some good starter deposits, a few of which are held by Northgold. And here shows the claim or tenement map of the district, highlighting Northgold's 3 project areas. And then importantly, there's 2 mills in the area, which could possibly receive material from Northgold's projects. There's the Laiva gold mine to the north, and the Piasami copper polymetallic mine to the southeast here, held by First Quantum Minerals. And our strategy, Northgold, is threefold. Number 1, we want to grow gold resources and advance towards development. 2, we want to also make new discoveries to give investors exposure to that big upside potential. And number 3, we want to continue consolidating and expanding within our belt. In my engineering career of 10 years, this was sort of the recipe for success that I found based on my experience, building and designing mines, as well as raising capital for them at the investment bank in Toronto. Gold is the world's most important commodity. It plays an important role in financial markets. It acts as a store of wealth, and it shelters investors from inflation. Gold price has risen this year to more than $1,900 an ounce and sits around $1,950 per ounce, US dollars per ounce today, which is relatively the last gold peak was 2010, and it peaked around $2,000 per ounce. So now, going into another, with the current risk of recession, we see gold as poised to rise. In the last recession between 2007 and 2011, the gold price more than doubled. And we think the stars are beginning to align for gold again. Also, you have, foreign nations appear to be decreasingly dependent on the U.S. dollar as a reserve currency for trade, gold should shine in a period like that as the U.S. dollar is losing its luster as a reserve currency, and meanwhile you have BRICS nations and other countries talking about creating their own currency, which could be backed by gold. We have a lean and strong team at Northgold. It shows the board here on the left and the technical advisory board on the bottom left, and the management team in the center, which is led by myself and a CFO here in Sweden, with a VP IR in Finland, and the core Geo team in Finland, Simo and Rika. And our share structure is also shown on the right here. We have institutional and corporate ownership amounting to roughly 14%. Brown Brothers Harriman is listed on our registry, but that stock is held by Rupert Resources, which is nearly between $500 million and $1 billion company advancing their Ikkari project in northern Finland. So together, Zenito is Finland's only silver and gold fund, actually. So together, Zenito and Rupert hold about 14% of the company. And that corporate plus institutional ownership is a number we want to continue to grow in our future transactions. And as mentioned, the management and the board own 8%, and our founding shareholders own just over 20% apiece. And this slide shows our achievements last year and this year, and our plans, near-term plans for the remainder of this year and next year. So we hit the ground running, and we came out of the gate and we drilled over 4,000 meters at Kopsa and 700 meters at Kamala Trend, nearly immediately following the IPO. And we also applied for our Kopsa auxiliary mine area permit application, and that's the one that's pending for approval this year, which would put our mining area permit into full legal force, and would allow the company to begin mining up to certain production rates. However, we would opt to perform the environmental impact assessment prior to initiating mining activities at Kopsa. Drill results started last year, and they were reported throughout the earlier part of this year and amounted to a resource update that we put out this year. Meanwhile, earlier this year, we acquired the Hersi-Kangas gold project from Rupert Resources. That project was non-core for Rupert, as they're focused in the northern part of Finland, but they were happy to take some Northgold stock, and they also participated in the financing and cut us a check. And they were happy to do that to help Northgold unlock value for that non-core asset that they held. We also completed more drilling this year, another 2,300 meters across both project areas, aimed at additional resource growth at Kopsa and possible new discoveries at Kamala Trend. And right now we're still completing soil sampling across all of our project areas to try to find the next drill targets. Next year, 2024, we expect the resource update following this year's drilling earlier in the year, and then hope to kick off PEA, environmental impact assessment activities, and possibly a drill plan. So these 2024 activities here are pending some additional funding. The resource update is the result from the drilling this year, and that's already funded. But we would require additional funding. But this is we can do a lot of damage with very little amount of funding here, because we invested so heavily in drilling in 2022 and this year. We're at the stage where we can calculate the impact that resource growth and drilling has on an economic study for Kopsa. There were historic studies completed back in 2013. PEA was completed, but we'd like to update all that information with our new drilling results. And these things are on the order of €500,000 euros to complete the PEA and the impact assessment. Perhaps if we raise, let's say, 2 million euros, we could also do some more drilling. But we see lots of potential to add value with drilling, but we have a lot of drilling completed already under our belt that we want to use to update the economic information for Kopsa. And here's a highlight of the mineral resource update we put out recently on August 9th. And this is part of the reason why I believe we may be at a transformational stage for the Kopsa project. We were able to increase gold equivalent ounces by 66% compared to the 2012 estimate. So the red is the 2012 estimate outline of it, cutting through the heart of the deposit on a cross section here. And the blue is our new resource estimate. I will flag there had been also a 2013 estimate within this red outline, which was on the order of 500,000 gold equivalent ounces, much larger than the 2012 stated resource on the order of 300,000 gold equivalent ounces. And that resource estimate, we were unable to confirm the assumptions in it. We had hoped it would check out, but based on the information we had and the new information that we gathered, we were unable to confirm that 2013 estimate. However, we were able to confirm the 2012 estimate, which was prepared by the same geologists individuals in Finland as we contracted for 2023. And we were able to show, like I say, 66% growth in ounces, largely by extending this main mineralized zone here down dip to the south. This is south and that is north, and we're looking west here. And importantly, this does not include the 2023 drilling that with assays still pending. So after 2024 or hole 14 was drilled last year, along with some of these holes here that are located on this cross section in the middle of the deposit. And then we had some success, obviously, down dip to the south in this hole 14 and some of the others that were further along strike. So we continued on the down dip to the south towards depth to see if that main zone continues with depth. And all the way down here for as far as 250 meters, step out to the south for this deep hole 34, which is one of the deeper holes completed on the project. And that hole we are quite excited about based on the visual core observations that were made. This cross-section is from a very recent press release on the 21st of August. And assays are still pending, so we have no guarantee of grades, no clear indication of grades yet. But based on the visual observations we're seeing on the core and comparing them to the core we saw last year, the team is very excited. So we're seeing fairly intense quartz veining and sulfide mineralization in these areas. And if you look at the core last year and the grades last year, this may suggest some decent grades in these bold circles, and especially in these bold circles, and to a lesser extent in the dotted line circles. So these are the parts that look good. The assays are still pending from the lab, but if the assays are as good as they were last year for this looking rock, there's strong potential to nearly double that deposit depth down to around the 250 meter mark. By expanding that mineralization further to the south, further down dip, which could be, transformational for the COPSA project and a game changer. Should these assays check out, and should we be able to deepen that resource to the south and to depth. Why invest in Northgold now? We think the timing is good. We have our second drill program recently completed with all of the assays pending. We're also expecting our auxiliary mining area permit this year before year end. It's currently still in the hearing process. Number 3, we have a COPSA resource update due by the middle of next year following the drilling done this year. And that includes that deep hole, for example, at COPSA. And we're planning a PEA for next year, which should incorporate the drilling we've done and update the economic information for COPSA. And the PEA will largely be focused on off-site processing arrangements, as had been contemplated in the past. But should the assays check out for the drilling we did last year, and should we be able to deepen that deposit, COPSA is starting to look like a standalone mine and mill with its own processing facility on site. So we will start to look at that in this PEA also as another option. And the share price is shown here over the last 12 months, and during which time our Northgold enterprise value per gold equivalent ounce has fallen from 25 to about 6. Meanwhile, the Explorer peer average has fallen from 51 down to 24, and developers have fallen significantly from 69 to 36. Meanwhile, the gold price is staying relatively strong, but investors do appear to be distracted with tech stocks and other blue chip stocks at this time. But we think it's currently a strong investment, a strong buying opportunity for the junior gold mining sector, especially for Northgold. As shown, we've fallen off a little bit more than our peers, as we are still a newer company and a relatively smaller resource base compared to some of these peers. But we think that's set to change soon as we get our results back from drilling and continue to drill more and complete our studies. And with that, I'll be happy to take any questions.
Thank you, Mitch. Yeah, so you had a bit of a scared card there on pending financing for 2024, but that's relatively small. You don't have major expenses to the sum of your market value. It's a smaller financing.
That's right. It would be a small fraction of our market value. Like I said, we have a lean team. I wear a lot of hats in the organization, and we have a lean core team of geologists in Finland. So we can get by on very little financing, especially given we invested so much in drilling. But yeah, and we're funded already through to the end of the year. But we are looking at financing arrangements now. And we're looking into the effect of, like I said, 1 million euros or 2 million euros. And that would, 1 million would certainly fund the PEA and the EIA activities we want to start. And if we, perhaps if we raise 2 million, we could make use of that additional funds with additional drilling. But that's quite optional. We could do a lot of damage with as little as 1 million euros, which would fund us through next year.
And this is good damage, isn't it?
That's right. That's right. We do some damage as an expression, get things done. I mean, make progress.
That's a bad car. That's a good car.
Yeah, true.
Sorry. So is all options on the table? You have your big owner. They're called Zenit.
Yeah, I'll just scroll back to that. So yeah, we have strong institutional and corporate shareholders, Zenito and Rupert, and we expect them to be supportive, but we also want to bring in new institutional shareholders, similar to, let's say, a Zenito, that has a little bit of mining talent and that understands the investment opportunity that is currently lies in the sector, and those discussions are ongoing with multiple parties.
Yeah. And so the big number for 2024, that will be the preliminary economic assessment for COPSA.
That's right.
And that document will be used to partner up or to take COPSA to production.
Well, that's the first step. We would like to continue doing the additional studies, pre-feasibility and then feasibility. So you have PEA, PFS, and then FS is the progression. And but no, we don't want to rush into production from a PEA. Like my background is building mines in Canada, and I believe in completing all the necessary studies to de-risk the project before bringing it online. But the PEA will look at the breadth of options that we have available, and it'll include some alternatives analysis and trade-off studies, and will point us where to home in the PFS, feasibility study, and ultimately construction.
Yeah. So with mining and Sweden, it's almost amazing that you're here in Sweden presenting this, considering that investors in Sweden are death scared of approvals, and approval processes can drag on, and then you think it's done and there's a reindeer and it's not done anymore. So that goes for valuation of prospecting companies in Sweden. You had, at least on the previous slides you sent an update, but you had, the phrase was, you have conditional approval for mining.
Yeah.
Can you expand a bit on that? How likely is it? Do you have the financing? PEA looks good. What's the regulatory hurdles for starting to operate COPSA?
Yeah, so we already have a granted mining area permit dating back to the historical project. But to put that into force for off-site processing, we need an access road that connects that mining area to the main road, which would bring the material to the processing facility. So that access road is outlined in the auxiliary mining area permit that we applied for earlier this year, and we hope for that to be granted later this year. So the condition on the mining permit is this auxiliary mining area permit, and that's due this year. Following that, we would, even though it's not required for small production rates, we would like to complete an EIA process prior to mining. And during that time, we would complete the additional engineering studies, PFS, FS. But long story short, we could be mining with off-site processing in as few as 3 or 4 years. And then on a parallel path, pending some of these assays, it looks like COPS is heading towards being an on-site mine and mill. And that permitting path would be on a parallel path to the off-site processing, and could be online as a standalone mine and mill in as few as 6 or 7 years, we think.
Yeah. So you're pursuing both ways forward, off-site processing, on-site processing.
That's right. The off-site is still sort of still hypothetical, or sorry, the on-site processing is not proven up yet. But we need to have those assays back. We might have to do some additional drilling, get the project up towards that 1 million ounce gold equivalent mark. But right now, the off-site processing looks to be achievable, so that's the starting point. But as we grow, the on-site processing with its own mill, we think will become increasingly attractive, and in the long term will be the major value proposition for COPSA, we believe.
Yeah. So for off-site, is that full off-site? So you take, because there were some staggering numbers to someone who's not within gold mining. You subtract less than 1 gram of gold for 1 ton of material.
That's right. The typical open pit grade is around 1 gram per ton gold, and that's where the sort of the grade at COPSA is at, 1 gram gold equivalent. However, COPSA has a very low strip ratio, on the order of 1.
What's a strip ratio?
Strip ratio is the ratio of waste to ore. Yeah. So for a strip ratio of 1 means you have to haul out only 1 ton of waste for every ton of ore. So typical open pits have strip ratios, of 3 or 4, or as high as 5 or 6. There's, one of the largest mines in Canada is Detour Lake, which I was involved with constructing. And they operate producing 1 gram per ton gold with a strip ratio of 6 to 1. COPSA has a much better strip ratio. Grade is near typical. And yeah, that would be processed 1 gram out of every ton, which is basically 1 part per million, if you want to look by weight, if you look at it that way. But that's typical for open pit mining. Mm-hmm. So it's not, it's maybe a little on the lower end of typical, but it's certainly in the middle quartile range in terms of global in terms of grades for global open pit projects.
Is there a choice between producing more but the longevity of the mine is shorter, or is there a natural sweet spot for COPSA being run for 10 years, 20 years or 30 years? Is that a choice, or does it come out by itself in the PEA on what's the feasible way?
Yeah, that is one of the outcomes of the PEA and the economic studies, which look at, you essentially want to mine as quick as you can to within reason. 10 years is a typical mine life. And of course, in your analysis, you have to consider the cost of capital. So future cash flows are discounted by your discount rate, which is, typically 5% is used. So, you look at the production rate, the size of your mill, the amount of resource you have to process, and the discounting of your cash flows. And all of that, it is you do trade-offs, and you determine sort of the optimal throughput and processing rate, which feeds into your mine life. And 10 years is a typical one, but as high as 20 years is not out of the ordinary. But the longer the mine life, the more of those later term cash flows become discounted and don't get as reflected in the net present value calculation. Yeah. So 10 years is a fair target and is typical for a mine life.
Yeah, but then the master plan for Northgold is to start with Kopsa, but then you have other fields that can come into operation, and they will be, I'm guessing, benefit from the infrastructure being made for Kopsa.
Exactly. If you look on this map here, you know, Hersey Kangas deposit is here. It already has 89,000 ounces, and that can be grown. There's a historic resource here of over 200,000 ounces. So there's much of this mineralization is below this resource. So we see, you know, potential here to get that up. The Kamala trend is a 15-kilometer trend with a tiny resource at the one end. And, you know, that entire trend is prospective for resource growth. So we could add, you know, Kopsa has a lot of growth potential, but also our other projects have growth potential. And, you know, this is only 50 kilometers or so apart. So we could have a central processing facility, perhaps at Kopsa, that is fed not only by Kopsa, but these other satellites in the belt. So in the long term, yeah, we envision this Middle Ostrobothnia district becoming a gold production camp across the belt.
If grade stays at around 1% and we have this low strip ratio, is there a rule of thumb as to the production cost for 1 ounce of gold?
Well, yes, typically if you have an average grade of around 1 gram per ton, and you might have an average strip ratio of, like I said, 3 or 4 or 5, then you could expect, you know, near a median production cost, which you know, today is probably on the order of around $1,200 US dollars per ounce produced. However, with, you know, if you start looking at off-site processing versus on-site processing, that can change things. But you can look at, you know, comparing the strip ratio and the grade to other projects, and, you know, we're a little bit better than strip. You know, our grade and strip ratio combined we see as a little bit better than typical. So we should have slightly lower than typical production costs in an apples-to-apples comparison of a standalone mine and mill. But we don't know that for certain, and that will come out of the PEA that we plan to do. Prior to the PEA, we have contracted a research analyst, prominent ASX, Australian Stock Exchange analyst, who is preparing a research report that will be shared in the coming months. And that will maybe provide some of those numbers that you're looking for from his independent opinion about what sort of costs that we could see at Kopsa. And that would set the bar for the PEA that's to be completed next year. That would have some of those costs that you're looking for.
Anyone want last question? Okay.
Thank you, Lars. Thank you, everyone.